The cryptocurrency market is quite literally on the edge of a cliff, with Bitcoin retesting key high timeframe technical and structural supports, and if lost, will result in a high timeframe correction for Bitcoin and altcoins alike. Is Bitcoin going to be able to push upwards and rescue the market, or will we inevitably see a crash toward the downside? Let's go ahead and find out. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be going over Bitcoin in regards to the macro and short-term charts. Going over the technical and structural levels you need to be watching moving forward, as well as running a complete short-term analysis in relation to the current, recent, and possible future price action. Before we jump into it, smash that like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and of course, the relevant economic events. No hype, no BS, no emotion, pure raw TA. That is the kind of content you're interested in. Join us on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with Bitcoin, with cryptocurrency, and of course with the relevant economic data. If you're interested in joining our VIP channel, we post trading signals with exact entries, exact targets, exact stop losses. As you can see, ADA short, exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis. Huge profit of 80% on that one. INJ short, again, huge profit. Exact entries, exact targets, exact stop losses, trade justification to help develop your skills. You'll also get access to our group chats, our general chat, our trading chat and education chat, our news chat, our video chat, our trade setup chat, and of course our help chat. This is by far the most detailed and of course beneficial VIP group on the entire market. Go ahead and check it out, guys. More information in the pinned comment at that free channel, including our entire trading track record with over 700 trades and of course 30 months of trading data. Let's go ahead and jump into the video, starting on the market data. So how are we currently looking for the month? Of course, last month ended quite red. September, we are looking at negative 0.32%. As of now, we're sitting 11 days into the month, so 1/3 of the way through. Moving upward to our 24-hour volume, coming out of the weekend, we do naturally see a surge in volume and volatility. So 24-hour volume is up 84%, sitting at 43 billion. All in all, 43 billion is actually still relatively low. Looking at 24-hour liquidations, sitting at 75 million. 75 million isn't too high, isn't too low. It's pushing that higher end in relation to the current volatility and volume in the market, up 420% for the last 24 hours, as we did see quite an aggressive liquidation wick toward the downside, followed by quite an aggressive wick toward the upside. So we are expecting both sides of this to be tapped out. Again, a little bit more on the long position over here, as the price action did drop below temporarily that base level of support. A lot of stop losses, a lot of liquidations would have occurred underneath that 25.6k level. And according to the data, it definitely did. So out of 75 million liquidations, 62 million of the liquidations were from those long positions. Moving to our volatility index, looking at the 30 and 60-day periods. The 30-day period, again, did see a small bounce. It has been plateauing now for 11 straight days. Moving over to the 60-day period, we also did see a bounce on that. It has been slowly dropping, more or less plateauing again since the start of September. Again, this plateauing in volatility is very indicative of essentially volatility being reduced to near to nothing. Volume is very, very low. This compression in price action, it basically signifies we're going to see a strong directional move when this period ends. And you're probably thinking, well, why does that make any sense? Well, if we see the prior price action, we go back to our macro charts, we saw a very similar thing around this period, right? We saw volatility dropping to 2016 lows. We saw sideways compression for weeks. We saw almost no volume And as soon as volatility spiked upwards aggressively, we saw very soon after an aggressive directional move toward the downside. So we are still expecting a similar thing. When volatility and momentum start to spike upwards, when a surge of volume comes through, we're likely to see a strong reaction in the market, especially because of how tight this consolidation range is currently developing. Moving on from there, the DXY has seen a small rejection, of course, printing a possible top over here in the short term with a bearish divergence developing and developed on that daily chart. Of course, we have rising price action, right? Rising price action, and we have falling momentum. So I got the wrong tool out there. Rising price action, slightly falling momentum. Quite a weak bearish divergence, but a bearish divergence nevertheless. We do see this exhaustion. This does represent exhaustion, right? When we see exhaustion at resistance, the probabilities of a rejection increase. So we said in yesterday's video that when resistance is resistance until it is not, and therefore the probabilities of a rejection from resistance, even if it's a small little rejection before a continuation, is greater than an immediate and clean breakthrough. So we are still expecting a short-term pullback. How big will the pullback be? It is unlikely to be too big. We're likely to possibly even come down to 104.2, retest this neckline, and then bounce up again. If we do lose this 104.2 level, we can expect then these lower levels of support to be retested all the way down to this dotted trend line. If the DXY breaks below the dotted trend line, that is when the uptrend is officially over. If we look at the current structure, we have this rising channel formation. We can see this uptrend is very well developed. If we lose these ranges down over this S level over here, that will signify a flip in the overall short-term trend, and thus the directional break upwards is no longer plausible. So right now, while the DXY remains in an uptrend, the break upwards is a likely scenario, but for the short term, the most probable scenario is a rejection on the short term towards these lower levels of support. If we lose this uptrending trend line, okay, this uptrending structure, then the probabilities between a continuation lower and a break upwards shift more in favor of a continuation lower. Now, of course, if the DXY rejects and continues down, this could provide short-term relief for cryptocurrency and result in Bitcoin going up. But if the DXY continues upwards, it could provide, of course, a means to an end for Bitcoin to completely collapse a little bit more. So we are definitely keeping our eyes on that, and it's very important to understand the correlation between the dollar and, of course, risk assets. It's a very, very important correlation to understand, especially on the higher time frame. So moving over to Bitcoin, guys, if we do see Bitcoin actually want to continue downwards, we're likely going to see the DXY continue upwards. And this is very indicative because not only Bitcoin, not only the stock market, but the DXY are all at very critical levels. The DXY is at nearly a 1 year long resistance. Bitcoin is at a 400 plus day long support level. The S&P 500 is at a yearly long dynamic support. So we're starting to see everything line up for a perfect storm for a big directional move, whether that be a huge bounce or whether it be a loss of these high time frame supports and macro continuations downwards. If we look at the S&P 500, we're still very much in the same position yesterday. We are in a high time frame uptrending channel. This, of course, is our overall uptrend. If we lose this uptrending support line over here, that will result in a macro continuation downwards. Until then, we are in an overall uptrend. On these short-term charts, on the short term over here, in the recent price action, it does look like we have printed a lower high over here. It's going to be very interesting to see what happens over the next few days. Of course, if we break over this local low range, we can expect a move back upwards to retest these high points. However, we're not looking for a continuation unless these high points are actually broken and actually validated for a continuation upwards. Until then, we still are expecting a move toward the downside. Same goes for the Dow Jones. We need to break over this respective local neckline of resistance to continue upwards, where we should see a move to retest these local high points. Of course, breaking over the high points will result in a continuation upwards, provided momentum, volatility, and volume are on the side of the break. If not, we may see a false high. Of course, until then, a rejection and continuation downwards is very plausible. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume, they both have extensive liquidity pools and market pairs offering up to 125x leverage, and most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Moving over to Bitcoin, guys. So there is a lot going on, and in the start of the video, we talked about how Bitcoin is retesting some very important levels on a chart, and not only important structural levels, as you can visibly see here, but also important technical levels. And you're probably wondering, what the hell is a technical level? We'll show you in a second. But really quickly, we need to go over this chart, and we've gone over it pretty much every day for the last 2 weeks because it's just very, very significant to understand how important this level. And one of the best ways I'm going to show you this is by just deleting everything off the chart and keeping the structural ranges and these little annotations to show you. So if we go back in time and take a look at the current support range, which have been essentially retesting now for 400 days, we can see that this support range, this 24.4k to 25.2k level, is a 457-day long support. Now, you're probably thinking, geez, that's quite a while, and it definitely is quite a while. And the interesting thing about this, guys, is if we clone this and drag it up to this resistance, we have a pretty much equal resistance, right? This is around a 400-ish day resistance when we retested these levels. If we take a look at our support over here at 25.2 to 24.4 and our macro resistance at 31.3 to 32,000, these are actually both macro triggers. So meaning if we break above 32,000, we enter a macro bullish trend, and if we break below 24.4, we enter a macro bearish trend. So this tells us straight away that the level that we are retesting is not only going to be a major determining point in regards to the macro trend on a high time frame, but it is a macro bearish trigger point. And when we have these points on the chart, these areas on the chart that determine the probable future direction if broken on a macro scale, these levels are generally defended to a very, very high point of aggression by the bears or the bulls. Remember, we saw sideways consolidation with pretty much a lot of reduction in volatility and volume at this point of resistance. We were telling you, momentum was falling, volume and volatility was falling. This was significant because it represented exhaustion at resistance. We saw the breakdown. We expected to move to 28k. We said if we lost momentum on the daily, we would see a move to 25.2k. We have played this move out perfectly. So this resistance at 32k is equivalent to the support at 25.2k. So a lot of people wondering, why are we consolidating so aggressively here? It's because this level of support is so massively significant in determining the macro direction for Bitcoin, okay? If we lose this level, we have a whole range below us all the way down to 20,000 until we find this next major high time frame support. Now we do have supports littered between here, such as 21.7 to 22k specifically, but the next major level of support is 20,000. So of course this level is going to be defended so aggressively. So that is number one. Number two, if we take a look at the 3-day chart and delete everything, bring up our Ichimoku cloud, we can see a structural level of support. This is going to be the lower band of the Ichimoku cloud. We can actually see on this chart, the price action is perfectly consolidating and compressing just above that leading span on the Ichimoku cloud. If lost, will trigger a continuation downwards / will indicate a sell signal for the Ichimoku cloud, which is going to be a shift in high time frame momentum and strength, which will likely lead to a continuation downward. What we are currently seeing on the Ichimoku cloud is our One second, guys. Our lagging span, there it is. I was looking for it. The lagging span has officially pushed into the cloud formation. Now, this is a sign of reduction in momentum. In fact, this is one of the bearish signs we are looking for a possible continuation downward. This is actually very, very bearish. This is not a very good thing, okay? Number two, the clouds are opening red in the 26-day period up front of us. It is a forward-looking and it is a lagging indicator at the same time, which of course is signifying a reduction in momentum and a shift in overall strength. Number two, we are currently holding above this level of support. If we were to lose this baseline, okay, if we were to lose the leading span on Ichimoku Cloud, the lower band of the Ichimoku Cloud, we will see a continuation downward, okay? So we are not looking very healthy if we do see that. While we are within the clouds, it is kind of this no trade zone, this zone of indecision, the zone of compression and consolidation. If we look back at the past, you can see every time we do eventually drop below these clouds, we do see a continuation downwards. Now, what the clouds don't tell us is it doesn't tell us how far down the price action can go. It simply tells us the price action is likely to see a correction. That is when we need to use our technical and structural levels. So if we do see a rejection underneath the clouds, and we do know the clouds are sitting at around about 25.5, we will likely see a rejection to retest our lower of support, our base of support, which is going to be 24.4. 24.4 is another key level. If we go over to the weekly chart and bring up our Gaussian channel, we can actually see 24.4 is exactly represented by the midline of the Gaussian channel. A loss of the midline of the Gaussian channel will result in a continuation through the channel and a break of the lower band. It's a very, very high probability that when we break through a midline, we'll see a full-blown continuation through the Gaussian channel at some later date, prior to it breaking back above the upper band. So I'll say it again. If we see a break of the midline, it is very probable we see a continuation through the Gaussian channel prior to a break back above the upper band of the Gaussian channel. Meaning if we break from the top side down, we are more likely to continue through than we are to break back above if we lose that midline point. Where will the price action take us if that occurs? It will take us sub 20,000. Now, I'm not saying all this stuff here to scare anyone. I'm definitely not saying all this stuff to show you how bearish I am. I'm not bearish, I'm not bullish, I'm a trader. I really don't care about the macro too much, actually. I trade the short term. The whole purpose of this is to show you guys what the macro charts are suggesting, what the biases are suggesting, what high time frame trends are present, so you can use that information to better position yourself on the short term when you're trading, because you want to trade with the trend more aggressively, or the macro if you want to know what is likely to happen in the future. It allows you to identify the key levels where the trends will flip in strength or direction, and that allows you to plan, execute, and prepare your positions and trade better on the broader scale. So just knowing this stuff isn't enough. You have to understand how to put it in practice, and you've got to understand why it's important. So when we're saying, oh, Bitcoin go down to 20,000 if this happens, it doesn't mean it's going to happen. It means if we see those specific requirements that will result in that move play out, then the probabilities for that move significantly increase. And trading is a game of probability, not certainty. So if it goes from like a 70% probability to a 90% probability, okay, then you're more likely to position yourself with the probable outcome. And that is the most important thing about trading, is positioning yourself with the most probable outcome at any particular time. We utilize market patterns sometimes, okay? We utilize stuff like momentum, volume, volatility, okay? What the buyers and sellers are doing, what the shifting strength is doing between the buyers and sellers. Market patterns are a great example. A market pattern is not just two random lines drawn on a chart. We're not drawing lines. That's not what TA is about. A market pattern is a visual representation of the dynamic change in strength over a period of time between the bulls and the bears. When we see a market structure such as, okay, a falling wedge, this isn't just two random lines, oh, we have a falling wedge pattern, we're going up. No, this represents, this cluster of price action is a physical, okay, a visual representation of bearish exhaustion in a downtrend. What does it represent? It represents decreasing volatility, decreasing momentum, decreasing velocity, okay? It represents that. So when we see a significant surge in volume, okay, which takes us higher than the previous points on this chart, okay, higher than the trend of which we've been developing under for a period of time, that represents a shift in all of those metrics greater than what we have seen in the past X amount of days. That then tells us there's been a dramatic shift in the strength between sellers and buyers, which could facilitate a continuation upwards, and thus we see a reversal. So the market structure isn't just two random lines. You have to get that out of your head. Your job isn't to draw patterns. Your job isn't to identify patterns, okay? Your job is to read the data behind the price action. Understand the shifting strength between buyers and sellers over different time frames. Apply that to your trading. Look at liquidity zones, look at resistances, look at supports, and identify where the price can continue or reverse from based on your data, and assign your probabilities to execute your trades for higher degree of success, okay? That's a bit of a rant, guys, but we'll go ahead and summarize the video on the short term. So short-term price action, nothing has changed from yesterday's video. We are currently in this mad 25-day chop zone. Probably the most disgusting price action I have witnessed for years on Bitcoin. And I wish I was exaggerating. This price action is abysmal, but it doesn't mean you can't trade, and it doesn't mean you can't make money. You just have to make sure you are selective in your decisions. If you're trying to overtrade this range, if you're trying to catch all these little tiny swings upwards on the short term, you're probably just going to get wrecked. Wait for these rejections at the high time frame levels. Wait for liquidity grabs below. Wait for these key significant moves within this structure to make sure you have the probability on your side, okay? If you're just trying to trade, a 0.3% move on Bitcoin over the next 7 hours, it's more of a headache than it's worth, okay? It's harder to gauge because the short-term price action is so choppy. We don't really have enough volume to even push the price in any direction. When we do, it's usually very sporadic and very quick because we're looking for those liquidity grabs. And number three, again, it's not really worth your time, okay? Sometimes the juice ain't worth the squeeze, and in scenarios like this, you're much better off waiting for these easier and more obvious moves than trying to catch and scalp out 0.2% of Bitcoin on a very small time frame when the price action isn't really letting you do that in the first place, okay? You have to know not only when to trade as a trader, not only know how to identify the market, but also know when your edge, okay, has the probability on its side. If you're a momentum trader, you do require a larger amount of volatility to trade than someone such as an order flow trader. So as myself, as a momentum trader, I'm personally not really trading these small little ranges. I'm more or less looking for the swings from these top points, like I shorted over here, okay? I shorted over here, we shorted over here, looking for these swings on the top points toward the downside more aggressively. Anyway, thanks for watching, guys. Short-term price action has not changed. We are in a horizontal range. A break above here will be bullish. A break below here is bearish. Anything else is neutral in the short term. And I'll catch you guys in the next one. Have a great day. Cheers.